How's it going? I'm Ryan, and today I'm going to go over the one trade that I took on NQ. Today was a red day for me. I had one trade, and it was a losing trade. Um, I'll go into why that happened. I got a little bit complacent, uh, and you know, it stuck to my rules, and we got stopped out. So it is what it is. Still up on the week. Not a terrible thing, but it could have been avoided had I just been a little bit more careful coming into the day. Before we look at the trade, though, let's take a look at what I was watching. So we're looking at the 4-hour chart here on NQ. The levels are roughly the same, and this is the first thing that I'm going to point out in terms of one of the reasons why I took the loss that I did. So these levels that I have in here are all derived from price action back here. And the reason being was, as we were moving up, I'm taking the most recent price action and extending those levels out to get accurate ideas of where price might respond in the upcoming or current price action. But once we made this move up, consolidated, made this move down, and then start moving around, slowly kind of grinding our way up in this area over here, we have more recent price action to base levels off of than the levels that I acquired from back here. And so some of these are still pretty valid, but some of these aren't. And that's kind of the big thing today, is that I was still using levels from like a month ago. And that's when I said I got complacent, that's what I mean, right? I had levels drawn from a month ago that I was still using today, rather than using more recent price action from the past week or so to judge those levels. So I will, in this video, do a live demonstration of how, if I took the diligence to re-update my levels off of more recent price action, how price action would have responded to those a little bit better, and how I could have read the market a little bit better. But let's take a look. We'll take a look at what I was watching based off the levels I had today, and then I'll do that. I'll clear my chart. I'll draw some new levels without looking at today's price action. I'll just draw some levels off the past for like a week or so, and then we can both look at how that would have, how that would have come out in today's price action, and maybe how that maybe would have saved me some money. So let's take a look. We opened the day. We are within, I guess I'll pull this back. We're within the range of yesterday's trading range, right? We have this green level, which is yesterday's high, red level, yesterday's low. We're within that. We remained within that this entire trading session. So mostly the one level that came into play today was this 20,790. And as we opened the day, we opened right around it. We held it, made a big move up, kind of came down, retested, made a pullback, retested. We were getting a lot of volatility. If you look at these candles, on average, we were moving about 50 points or so per candle. And it was pretty volatile, right? A big move up, pull back, move up, pull back to that level, back up towards high a day, back to this level, broke. Once we broke and we retested this level on this 5-minute candle here and looked weak, I actually tried to enter a short right here, and my entry just did not get filled. So the reason why I was looking for a short there is because if we're looking at this 2-minute, and then you can also see this on the 5-minute, right? We had a bit of a double top, right? We have this base, we have a high, we come down, we touch this level again, hold it as support, don't make a new high, we fail to create a new high, come back down, we're looking weak throughout here, we sell off, we come up and retest, we're kind of chopping around in here. And we also have all the EMAs kind of doing bearish crossovers, right? That 13 EMAs crossing over the 48, crossing over the 200, we're below the 200 EMA. Things are looking pretty weak. Additionally, we have pretty high volume. So if we take a look at the volume, I've been talking about volume a lot lately. On this sell-off here, we have the highest volume that we had. And then as we broke through that level in the 200 EMA, we had, the next, or the highest volume up until this point. And then from there, that price was kind of as price was chopping around, volume was dropping, so we're not seeing a big bounce. We're not seeing a lot of people stepping up to buy in here. And as we're testing this area, we're looking weak. So I placed a sell limit order. I placed it like right in here, and you can see it was this wick right here that missed me, and it missed by less than a point. If I show you where my stop would have been and my take profits, you see those take profits are the dotted green lines to the bottom. The stop is the dotted green line to the top. So stop was up here, take profits are down here. Although we did turn this 2-minute candle into a hammer on pretty high volume, which would have not been great if you're trying to hold to the downside, it would have hit both my take profits. So not trying to make excuses, but I did try to take this trade and just didn't get filled, and it would have worked out. So that happens. Can't really worry about that. That's going to happen. Sometimes you just don't get in on a trade, especially when you're being picky with limit orders. So after that, I think I was feeling a bit of FOMO, seeing as though I just missed out on a nice winning trade that would have netted me about $400 on the day. We came up, we retested this level again. You know, we continue to retest it. We drop pretty hard on high volume again, right? Selling is high volume. We get this very bearish candle here on the 5-minute. We come up and we print this candle. Pretty weak, right? Long upper wick, small candle body. And as we come up and we start to test this area again, I entered short in here. The reason why I entered short is because I was watching the 15-minute. If I zoom out here, we'll take a look at this. So right where I entered short was kind of at the bottom of this range here on the 15-minute, right? We had support, bounce, bounce, bounce. We had some rejections in this area. And that's kind of right where I entered my short position because we had tested it, it looked weak. We came up to test it again. I entered short and then got stopped out. My stop was above these wicks and above this level because that's where my trade would be invalidated, right? If we broke that swing high. So we have our high, we have a low. This is kind of like a little bit of a swing high. We see 4 consecutive 5-minute candles testing this level and failing to close above it. So I put my stop just a little bit above those wicks, seeing as though if we do break above that, then that invalidates this, right? And that weakness that we see here is no longer true. The sellers that are here have been cleared out, right? And buyers are pushing that price up. And that's exactly what happened. I did not expect this massive green candle, probably the most bullish candle that we had all day. And we just blew through and stopped me out. And I had a little bit wider of a stop loss because my entry wasn't great. So this trade wasn't good for, I'll say 3 reasons. I'll give 3 reasons why it wasn't good. The first being, I was taking a trade based off of a 15-minute level. You know, we have support, turn, resistance, but it wasn't a key level that I was watching from the 4-hour, which is where I like to base most of my trades off of, is key levels off of the 4-hour. So that was step 1. Step 2 is it was a little bit of FOMO, right? We already had this massive drop. We already had the bounce. We had another drop, and we started to move up. And it's not a great setup, right? It's not necessarily the entry that I want because it's pretty far from where my stop loss would be. So that's number 2, is the entry wasn't great. It allowed me, or caused me, to have a wider stop loss and take a bigger loss than I would have liked. And then the third reason is what I mentioned at the very beginning of the day, is that I didn't do my due diligence and update my levels to get an accurate representation of where we were, right? So I was basing everything, and this level was pretty accurate. You see the bounces here, you see the rejections, so this level wasn't terrible. But I didn't have anything up here, even though we had price action in this area. You see like where we reject up in here. We have price action the previous day up in that area. We have rejections up there, but I wasn't charting any of that. I didn't have any of that marked out. Likewise, we have some support in here, right? We have this swing high. We have some bounces in here. We have some bounces in here, and I didn't chart any of that. So we were a little bit closer to support than I would have liked when I took a short. So those are the 3 reasons. So that's it. That's the only trade I took. I tried to take a short here, didn't get filled. You know, tried to take another trade, maybe out of FOMO. I'm sure I was trying to be patient. You know, I didn't immediately enter a trade But I entered a trade that maybe I otherwise wouldn't have because I missed the one that I actually wanted. So that's that. I do want to just say, going over the bad things I did, I want to go over the good things I did. And I think two things I did well. The two things I did well are that I placed my stop loss at a level that invalidated my trade rather than something arbitrary, right? And I allowed price to hit my stop loss. I didn't freak out and get out of the trade quick, or I had my take profit, I had my stop loss, and I let the trade play out. So that's one good thing, is that once I entered the trade, I just let it do its thing and I didn't try to fight it. And that's good. You have to, if you enter a trade, you have to kind of accept the risk that you're taking, accept that it could be a losing trade, adjust your stop and your take profits accordingly based on what would make your trade invalid. And it didn't work out, and that's all right. So that was the first good thing that I did. The second good thing that I did was that I did not take another trade on the day, especially after seeing this massive move up after we'd been kind of weak on the day. Of course, I felt some sort of way. It was my first loss of the week, actually. I'd been positive every single day this week, and this was my first loss. So it hit a little different. It ruined my winning streak, and of course I wanted to end the week on a good note, right? I wanted to have a profitable day and go into the week up a bunch of money, but it didn't happen. And I got those feelings. I kind of wanted to revenge trade. I felt that in the back of my head creep up as soon as I took that loss. And especially with such an aggressive move to the upside, immediately you're thinking, screw it, I'm just gonna go long, right? Like, obviously there's buyers, whatever, price wants to go up, I'll just buy. And if I did buy in here, we did get a 50-point move up, so it would have worked with no drawdown. But it wouldn't have been a good trade, right? It wouldn't have been based on anything other than emotion. But I didn't do it. I just accepted that I took a losing trade, got off, walked away, and moved on and tried to learn from it. So those are two good things. I followed my rules and I didn't revenge trade, so I'm happy with that. And in doing so, I didn't take any more losing trades. I still ended the week up positive. So it's not all bad. All right, before I wrap this up, I'm just going to do a quick exercise, and we're going to see how I could have avoided this. So I'm going to remove all my drawings, so we have no levels, and I'm just going to do this real time. I'm going to ignore today's price action, so I'm not, looking at today's price action. So where would I be? Okay, so that's the pre-market candle. All right, so this is the price action this week leading up to today's pre-market. I'm not going to look at today's price action because I don't want to get a, kind of an advantage knowing what the price action did. So let's take a look. Where would I place some levels if I was drawing it based off this price action? Well, like I said, we have pretty clearly like a level somewhere in here, right? You can see we have some support, we have some resistance, we have some support. Maybe drop that down a little bit to get like that candle. So it's holding that on the close of that candle because I take more emphasis on opening and closing of candles than I do these wicks. Okay, so we can say like maybe somewhere in there. And it's not perfect. These levels are not like to the cent, right? There's always going to be a little bit of wiggle room, but somewhere in there, there's obviously a level that we have a rejection, we have support, we have a rejection, we have support. All right. Then there's an obvious one, right? Whenever you have a swing high, you want to take that. And we have some rejections in here. So you could say, okay, I'm going to place a level somewhere in there. Then I would say to the downside, maybe a level like somewhere in here. All right, because we have all these candle closes, we have support, let me break through. This isn't perfect, but maybe somewhere in there. Now let's look at today's price action and see how these levels play out. So let's extend them. All right, and what do we see? Well, this is today. These three candles here are this morning and the after hours. We see that we failed to close above this once and twice. We wicked above it, but failed to close above it. We also see that we held down here on support, this level that I just kind of arbitrarily drew. Not arbitrarily, but drew off of, price action recently. So let's look at what that would look like on the 5-minute chart. Would you look at that, right? Pretty much timing the absolute perfect top of that reversal, and then also that support. So had I done my due diligence, I probably could have recognized, and if you look at the 2-minute chart, right, we get a move up, then we look weak, and we get a rejection down. We get a move up, we reject off that level pretty perfectly. So maybe there could have been a trade taken there to the downside. As we came down, what do we have? Look at this super high volume hammer right off that level. I drew that without looking at today's price action. It works out perfect. Then we come down and we test it again on really high volume and hold, and then we start moving up. So had I seen the support here that we held once, twice on high volume and start making our way up, I probably wouldn't have tried to short immediately off of it, right? I want to short up here. I want to long down here, right? I don't want to short at support. I want to long at support. I don't want to long at resistance. I want to short at resistance. So the picture becomes a little bit clearer when I have more updated levels. And this isn't perfect, but it just goes to show how taking more recent price action to draw your levels is always going to be more accurate, right? As opposed to going back and having levels from October, right? A month ago, literally a month ago. Because why? Well, these levels are all derived from where people are buying and selling. And if you want to get an accurate idea of where people are buying and selling, you want to take the most recent price action, because those are going to be the most recent, selling and buying orders that were placed. And there's probably still some buying and selling orders in those areas that have yet to be filled. So as price approaches those areas, there's still, orders to be filled, whether it's selling or buying. And yeah, you can just see that we came down, we held this area of support again. You see we get resistance on this swing high, kind of close to that level. Like I said, these levels aren't perfect. It's kind of more of a zone, but you get a better idea of where price might react. Same thing, we see price start to react up here. Then what? We break it, we kind of hold above it a little bit, and then start moving our way down. So it's not perfect. And I don't want to make excuses, but I did get a little bit complacent and continued to use levels that were a little outdated. And that's just a lesson for myself to learn and not get complacent, do my due diligence, and make sure that I'm using the most accurate information that I have at the time to make trades. That's all I got for you. It was a losing trade. I'm going to come back next week and try to continue the winning streak, not let one loss affect me too much. Thank you for watching. I do trade live Monday through Friday. If you want to stop by, please do. All right, peace.